All right. On YouTube, on the virtual trading floor, someone could post a link. It's appreciated. I'm going to get started. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Got some new positions on the position disclosure since Thursday's afternoon meeting. Tallow, Path, Jumai, Facebook, Tel, Neo. Actually, might have had Tallow and Path a little bit longer than that, but at least those last four. All right, let's get into the heart of the meeting. Great day today, team. Let's go. Another day, another dollar. Am I right? We were just super on point again with the communication here as far as the market goes and as far as what to look at. So we, first of all, Friday morning, we discussed how a potential higher low could take place for the market. This pullback here was the first, in my opinion, the first real test for bulls on this entire way up. And I know that this move here was sick, really sick, maybe the second test. But this move up here was really sick. But we know internally a lot of that was caused from shorts getting squeezed out of the market, hedges coming off for funds. And the question really was, can that turn into actual real buying? And there were a couple of points here. One was on this day, which I guess was off like the first test for bulls because that was the only other time we've had a price correction in this entire move up. And we really started seeing a lot of bullish option flow come in on that day. And then we saw more flow really coming in on these 2 days here. We recognized that the market got super extended. We called for putting hedges on just for a market time or price correction. Price correction came in. And again, the reason why I'm calling this like the first real test for the bulls, maybe it's the second test after this one, is this is the first time like we had a major kind of multi-day sell-off and real pullback for the market. You had the first day here where I remember it being negative, and I remember saying to you guys like we should really be down more, and we weren't. And then we had the end of the quarter here where we had the $10 billion sell imbalance into the close that really brought us all the way down to this ADMA, the upper band of our technical equilibrium zone, so that at this point we were no longer extended to the upside. And then came Friday. So we have seen on Fridays the market not want to take a lot of risk into the weekend because of the Russia-Ukraine situation. We've seen that happen a lot this year, though it seems like the market is, dare I say it, starting to care a little bit less about the day-to-day activities that are going on over there. And again, it's not to say anything about it not being an important situation and a tragic situation, and I know a lot of us are really supporting Ukraine in this time, but I'm just talking about specifically with the perspective of the market. This pullback here, we wanted to know going into this Friday, is it possible now that bulls can actually come in and defend in this pullback, or is it just going to be, short squeeze higher, they get rid of the hedges, and now they bring us all the way down, and there's no bulls to actually be found, and there's no real new buying that comes in. So we had kind of been in wait and see mode, and we talked Friday morning about two potential ways in which this market maybe could create a pivot for itself. One is the inside and up setup. And by the way, these two potential ways are the two potential ways in which I'm always looking for trend continuation. Whenever we have any sort of uptrend and then it gets a little bit extended and you look for that technical pullback, when we get into equilibrium, these are generally going to be, and it can happen in other ways too, but I think that the most executable, if that's a word, from a trading perspective, ways to be able to actually buy stock on those pullbacks into equilibrium, because you don't know if the market's going to pull back just to the ADMA, into the equilibrium zone, to the 21, or even overshoot the 21 and come back, is through an inside and up, where basically you get that negative Maribozu into equilibrium, followed by an inside rest day that breaks up and then negates that candle, or through a continuation hammer, which is basically exactly what this candle is right here, where you break that day's low, you're into the equilibrium area, but you tail back up and you close well. and that's the formation of a pivot point that then leads you higher. Now, we are by no means really in a pattern of higher highs and higher lows here. Maybe you could argue, you know, high, higher low, higher high, so we've had that, but there's no guarantee of continuation here yet. Today was a really strong bounce. Market looks really good, especially when you look at the Qs, which I can take a look at it in a second. But we are still below our major resistance area, 458 to 460. So this was a great pivot formation on Friday. This was great follow through today, which is what we expected. Even though, like I said in the morning meeting, the market is in neutral space as far as I'm concerned. For that game I love to do, bullish, bearish, neutral. I think below 440 we're bearish, above 460 we're bullish, and the space between 440 and 460 we're technically neutral. In a neutral market you can be more long and short, and it's harder to really expect continuation. But that's bigger picture. On a little bit of a smaller picture, we know the market's been strong and this is a potential continuation hammer for upside. So what I was saying in the morning meeting today was that we should really be long focused. And you can see the SPYs again giving great follow through. The S&P is up 0.8% today, but it was really your NASDAQ that was the massive leader. NASDAQ is up 2%. And by the way, not only have the SPYs not gotten back into that resistance zone, they haven't even reclaimed Thursday's high yet, which was that higher volume negative Maribozu where we saw those heavy MOCs come out. But the Qs, they're above it. And 370 is the major level here. Qs were super relatively strong today. Again, similar pattern. You know, here's your pivot. You know, we're looking for upside continuation. The one thing that was difficult to have an idea of pre-market because we had a flat open today, and I don't like flat opens, is it was hard to be able to tell pre-market where we would see relative strength and relative weakness. And the IWM was very relatively weak. It still gave a close above 207 today, so I would say that the IWM is actually looking pretty bullish, but the relative weakness is notable. But we didn't know, like sector-wise, necessarily that growth was going to be super strong today and that energy was going to take a little bit of a rest. I had names from both on my radar. So whereas we had a bunch of days here last week where I kept preaching in the morning meeting, guys, less is more, let's be patient, let's see what the pullback looks like, things of that nature. That was not my thought process for today. And whereas in some of those days last week where I had the less is more mentality, there was a couple days where I literally only had 2 or 3 symbols that were on my list, and I remember almost feeling like on one of those days like I was even kind of forcing those couple of names just because the market wasn't, you know, set up for trading. Today there was just a big list of stocks. So many of them worked really, really well. So let's take a look. So first of all, first on my list, which I did not get involved in, was SunPower. So we talked about, you know, we call it Spewer, just trying to pronounce the symbol. You know, very clear resistance level here at $22. This, if lowercase James is here, this, by the way, is a breakaway gap. Gapping up above the $22 resistance, you've got a breakaway gap here. Got upgraded by Bank of America, got a price target increase by JP Morgan. The chart's been super bullish, but yet not extended. Gaps above $22. So we talked about in the morning meeting being long versus 22 bucks. Low of the day here is 22.21. I remember typing it up in the meeting and I was so tempted to take the offer at 18 cents and I didn't because I already had pre-market bought NEO and Jumai by that point. But I didn't take the offer to buy that SunPower at 22.18 pre-market when I saw it there, and then I just didn't have it focused on my radar from the second the market opened. That was the only way to really get stock on this, and honestly a bunch of the other trades that worked out really well. Most of that execution really occurred in like the first 2-3 minutes of the day, which, by the way, I have always found over the course of my career that my very best trades are ones where I'm executing like literally the minute the market's open, things are triggering, and it all just kind of goes properly. The longer the day goes on, the worse it kind of becomes for me personally. I know we've discussed in the past that that's not necessarily true for newer traders because the open can be kind of fast and hectic. Newer traders tend to have better statistics between 10 and 11 a.m. But for me personally, like this is my idea. Like this is just so beautiful. You got this super, super clean level here at $22. You're getting the analyst upgrades that puts the thing in play. It's a technical breakaway gap. Like if you executed this the second the market opened and you got 22.25 as your price, you got 25 cents risk on this, or you were able to cheat in a little bit pre-market and get stock. It's just phenomenal. The only thing I see out of the corner of my eye, Gabriel asking if it's an A trade. In a lot of ways, I think it is, right? Going off the open, volume confirmation ends up being there. Market is totally on your side. It's in play from the upgrade. The sector, the solar sector, if you will, as much as I know some people here don't love it, and I get their reasons why, has been relatively strong recently, just off the story of the higher energy trade in general. So you really have like just about every layer of probability, I think, on your side on this thing. The only thing that you maybe would say could detract from it is having to pay up 25 or 30 cents or even 35 cents in a $22 stock, versus 22 bucks. I guess you could have kept it tighter just versus that opening low, but I think as we've discussed in the past, I don't like using those opening lows really as my stop loss until the moving average has caught up. So maybe you could have bought like some really tight just because the risk is so low off the open, just right away versus that opening low, but you're really risking getting shaken out of it. But maybe who cares because it's so tight and you're able to get so much stock. But the real proper stop loss is $22. Maybe you're arguing you got to pay up a little bit much on it, but it's a $22 stock. But it's got decent beta. The thing can move here a little bit. I mean, even today, the follow through off of that, if you paid up, was to above $24. So just really nice. And this would be something that you probably would swing if you caught some. So that was really nice. One focus for me was NEO. NEO was actually a little bit frustrating, a little bit off the open, because so many things that we had on our radar just kind of immediately just like ripped up, and the Chinese names didn't. Granted, the gap on them was huge. I think it was like a 6% gap up for NEO. Very similar for JD and Alibaba as well, and that was primarily because so NEO had like a double whammy of news going on. There was more positive news coming out of the accounting situation with Chinese companies that are listed in the United States, which is possibly maybe necessary for them to continue to be listed here. Though I've never thought personally for a minute that the United States is going to delist Alibaba, JD, NEO, and some of these other majors. The market has thought that though, and the market has discounted the prices and the multiples as a result. But so you had the positive accounting news coming out on China and NEO getting upgraded. This is also kind of a breakaway gap. The chart here is a little bit sloppy. And I remember looking at this in the morning and I was like, I really want in this thing, I just got to figure out where my stop loss needs to be based on this huge gap up to know if I'm right or wrong or whatever. Like it's gapping up big, it's kind of a breakaway gap, but you got these tails here that make it a little bit sloppy. So I kind of rounded it to like 2250. Which is like about the high of this tail and about the high of kind of these closing bodies here. It's never really given you a close above 2250. So, sometimes when I'm looking at resistance, I'm looking at it in terms of like closing basis and absolute basis. So I would say like for this NEO as an example, you've got closing basis resistance at 2250. You have absolute resistance that goes up to 24 because this one tail here goes all the way up to 2386. So that's kind of the way that I look at it. But I really liked the idea here, that now that this thing has had a lot of time to digest the big move that it had off of lows, it created that resistance. You've got the positive news in the sector broadly. You get the positive news for the stock. But this one was a little bit tricky because you had to really pay up. I'm trying to remember what price I bought initially. I started at like 23.25, I believe. So I started at like 23.25, giving it 75 cents risk, which is a lot for a $23 stock. But I got a big picture thought process on it. If this stock closes well, and it closed okay, didn't exactly close above 24. That would be nice because it's that more absolute level. But, you know, if this thing starts waking up, giving me my close above $24, what am I looking at for reward potential here? Well, there's resistance at 26, there's resistance at 32. I could easily see the stock working its way back to 32, especially if the market cooperates and there's no new real major headline negative news that comes out of China. So for me, the risk reward of, you know, this thing maybe being able to give me a move up to, you know, 32 bucks would be nice, and, you know, trying to look for the big reward on some of these trades, of course. And it definitely was sloppy here off the open, had me a bit nervous, but I had a game plan. So I could easily see people, and I know one person in the VTF mentioned, like, oh my God, I traded this NEO so horribly, like right here when it was working its way back up to highs. And I can easily see, and this goes back to a lot of the market psychology stuff that I love to talk to you guys about, and that we probably should spend more time talking about and less time talking about technicals. I could easily see how trading NEO today would have been really difficult, and how you easily could have messed it up. This price action here was getting into my head a little bit. I'm looking at Jumai that I'm in ripping higher, Sunpower that I missed ripping higher, the Q's just totally ripping higher the second the market opens. And I'm like, I bought this original kind of core feeler type position. It's a little bit more than a feeler, a little less than what I would call a core, to be honest. Around 2350, and now it's immediately trading down. Because you got to remember, if this bar closes as a tail, that means at one point while the bar was open, it looked like it was, you know, I was at lows here at 2275, and I'm like, oh my God, bought this thing at, you know, 23.25. Everything is ripping higher. This thing's going straight against me. It's getting in my head. So if anyone else like didn't trade this well because it was getting in your head, I get it, but at the same time, you can't let that happen. You know, it's like I always say, buy the ticket, take the ride. I can't control that SunPower's this beautiful, amazing trade and go straight up. I can't control that Jumai's this beautiful, amazing trade and go straight up. And then NEO is much sloppier off the open and maybe doesn't work out at all. The only thing I can control is my actions in respect to what the market is doing. And the right thing to do to avoid letting sloppy-ish price action like this, and then it looked bad again when it broke this wedge to the downside. Like right here, this thing, I think I commented on the VTF. At 10:15, this thing looked really bad again. And then really ended up giving a 15-minute price correction, creating a pivot, and then actually working its way back up to highs and looking much better. So between this opening price action, if anybody was in early with me, and this wedge breaking to the downside and this sloppier price action on this 15-minute correction, really easy to mess this trade up. But for me, I know my game plan because I created the game plan before the market opened. I know I want to give this to 2250 because that's what my game plan was based off of. I'm comfortable with the risk on the trade that I'm putting on. So instead of panicking out or trading it incorrectly or anything like that, I just followed my game plan. And my game plan told me to add at $23. So I actually was able to add here at 23 bucks, get a little bit more size. And then when this thing was working higher, even though my original price wasn't too great, so I was able to get this add on it, which was a little bit better, and now I get this move up to 90 cents. I'm able to do a little bit of selling on the way up and, you know, book a little bit of profit on it. And then I kind of rebought some of that stock and was able to do the same thing, and then I sold some into the close. And at the end of the day, it wasn't an easy trade. It was definitely sloppy. It easily could have messed with your psychology, but it goes back to the importance of game planning. It goes back to the importance of knowing how you want to take the trade before you get in it, and knowing how much risk that you are planning on having on the trade before you get in it, being comfortable with the entire situation, buying the ticket, taking the ride, not making emotional decisions in real time because, oh my God, all of a sudden it doesn't look good because the wedge is breaking down. I'm not letting that impact my thought process. My thought process is, I have a specific game plan, I know what I'm risking, I'm following through on that game plan, and the results will be what the results will be at that point. And I really think that that's the right process, because you can mess yourself up or talk yourself out of any trade. Speaking of talking yourself out of trades, Josh, if he's listening, this Jumai was the great winner today. So this was like another one that was just awesome. I made pretty good money in it, especially considering that my sizing for a $10 stock wasn't massive. You know, just a pretty simple trade here for me. just covering my risk and holding, basically. You know, you can see as soon as I mentioned it in the morning meeting and I saw where it was trading, I bought some. Again, this was really a feeler-ish type of position. It wasn't huge, especially for a $10 stock. Did I get a 30% move on it? Yeah, which is nice. But, you know, risk covered at 1-to-1. You know, basically as soon as the stock's open, I'm able to take some off and kind of cover my risk because I'm long versus 10. Taking off a little bit more stock to make sure it's a winner no matter what. Taking off a little bit more stock in front of 1150 to make sure it's a winner no matter what, especially because stock was getting very extended, puts in this little 5-minute shooting star, and then at that point just hold. Just hold. I don't know where this thing is going. It's nuts. It's up 30% on the day. And again, this was another one where we combined our layers of probability plus a breakaway gap trade. So that was the thought process on it, right? So beaten up growth stock, but $10 is a very, very clear level here. You got a tail above it here. You got a tail above it back in February. So you got a very clear level. It's not extended. Gets news this morning, which we always like. There's news out of a partnership with UPS. And to me, when I looked at that news, I was like, I don't know how actually significant this is, but I feel like it's a legitimizing factor. And that can be important for these types of stocks. There's been, you know, a constant conversation since Jumai was an IPO. And I remember this insane move that Jumai had when it first IPO'd, that it's the Amazon of Africa. And then it gave 100% retracement. And then this period in here was just terrible, terrible. I think there were fraud reports and short reports and things like that coming out from, you know, different firms, and, you know, stock was more or less left for dead, rounded up off of $2. And then we got our great growth stock bubble at the end of 2020 into early 2021, where then this thing was able to go from $2 to $70, which is equally nuts. The stock honestly probably doesn't belong at 2, and it probably doesn't belong at 70. But obviously, you know, super volatile name. Then the growth bubble implodes, works its way all the way down, becomes the stock that you almost forget about again. And then it's like, oh, look at this news. Oh, look at this. $10 is a big level. Oh, look at this potential breakaway gap. You know, volume kind of really coming in and confirming it. So it's the same thing. The hard part with Jumai, though, is if you didn't buy pre-market, it was difficult to get stock. The volume was massive, though. So if you recognize that volume, you could have just gone for a pure momentum trade versus that low. But otherwise, you know, by the time this thing opened at, you know, 10.50, I really can't advocate paying up 50 cents in a $10 stock. It's just too much. So either you had to recognize the volume and get in as a momentum trade versus the opening low without the ADMA catching up, which is always scary, or you kind of had to have it pre-market versus 10 in order to have good stock. So that was working out great. Facebook was another one that was great. You know, I did a very similar thing here with Facebook. So Facebook we discussed in the morning meeting. So first of all, we talked about potentially being long Apple in the morning meeting today. First time I've mentioned to buy an Apple for a while, because this thing has just been too extended all the time. But just like the Qs here, great little pivot into equilibrium. If the Qs are able to be strong, Apple can potentially lead. So we talked about an Apple long in the morning meeting today. That worked great if anybody was able to get stock. We talked about Microsoft for a long in the meeting today. Same exact thought process, also above the key $300 level. That worked out really well if anybody got involved in it. But Facebook was the one that I bought today. The thing I liked about Facebook was that whereas the Qs, Apple, Microsoft, even though they all looked good for higher prices today because of the hammer continuation pivot that they gave, Facebook kind of did the other scenario that we talked about when we were talking about the NASDAQ just before, where it actually gave an inside bar on Friday. And I remember, because I remember Brandt and a couple of other people talking about it during the day on Friday, that this thing showed so much relative strength. But the market wasn't there. I remember, you know, early on here, the relative strength that Facebook was showing in the first hour and a half of the day, when the Qs were weaker and pulling back before they eventually caught the bid into the close, was great. So I already remember from our conversation on Friday that Facebook is relatively weak. And then you can just see in the chart, right? Everything else on Friday broke the Thursday low and came back up. This thing just digested all day and held in. So the buying has definitely been there. I know that some people like this thing from a fundamental perspective right now, from where it's come down to. And it's just great inside and up kind of setup here. So for me, keeping it as simple as I could, I just got a buy stop at yesterday's high, just for continuation. The problem with this trade was the risk. Also, I felt, and I couldn't take a ton of size, and I felt a little bit uncomfortable, even with the size I took, buying. And you can see here, I very simply had a buy stop at yesterday's high. That's how I executed it. So I just put my buy stop in yesterday's high. I get triggered, and I'm like, okay, what is the exact amount of risk here again? It's like, all right, what did I just buy? Like 228.30. What's my stop loss? 228.85. I'm like actually having to think about the math here for a little bit, like on what my space risk is on my 1-to-1 for a second, and I was nervous to risk whatever this is, like $1.40 or so. But same thing, had the game plan in place. I'm comfortable with the risk I took. Unfortunately, the space risk meant I couldn't be too heavy in it. So I got smaller tier size for bigger spacing risk. That happens sometimes. And it just worked out really well. So I got my 1-to-1 kick. I sold a little bit more, and then Felipe got mad when I said that I sold some in front of 230, and he was like, stop selling. It looks so good. Stop selling. Just hold it. Be greedy. Felipe told me that. So I was like, okay, Felipe, I'll do what you want. So I had one other offer, I think, in front of 231, and I just canceled it. And I was just like, I'm just going to entirely trail this thing. Maybe I'll sell a little bit in front of 235 if it gets there. This is another one, very easily, if the market cooperates, I think Brant was saying this when we were chatting about it in real time when it was triggering. If the market cooperates, this thing could easily be back at these highs from the earnings report here. Could easily be back to 245, even 250. And whereas it seemed like a lot of risk, it's definitely a more expensive stock. But where it seemed like taking a $1.40 risk felt like a lot, and I couldn't take a lot of size. Well, what's the risk reward here? The risk reward here is I potentially have stock from 227 or whatever exactly the price is, and I'm looking at a 20-point move off that. Well, that's still a fantastic risk reward. And then maybe I'm in the gap, and then maybe I'm trailing it on the daily chart, So it's like I was saying, and the reason I'm kind of going over this is, people were talking about Labu, and some of you guys were trying to enter this thing today, and actually this was a tough one today because, we still got all my executions on here, because the break of this opening low, I know, shook some people out because it was breaking 18 bucks, and we were kind of looking at it. So this was definitely a tricky one here, but it's like it goes back to when I was buying this thing more heavily here, like below $13, and I was saying, I think after the close, somebody can check the afternoon meeting because they're all on YouTube. You can timestamp me on it. I think in the afternoon meeting here on maybe it was the 16th, I was saying, I got a profit target of 20 bucks on this thing, and you know what? That's a really big move. If your price is under 13 and you're looking for a move to 20, that's a really big move. And honestly, there's probably not a super high probability that it gets to those really reach price targets that you can create for yourself. There's not even some of the ones that we're in now, like this NEO. There's probably not a huge probability that this gets to 32 without shaking us out. But you don't need to have it happen to you very often. Apple here really made my march in a lot of ways, along with a few other positions that worked out really well, off of the similar thought process. I'm in here versus 150, and I'm just going to trim and trail, and maybe this thing makes its way back to all-time highs. That's what I'm thinking. My target in Apple has been 183, and good chance that it doesn't give me that move, good chance it shakes me out. I mean, how many other ones have there been in recently where I ended up getting pushed out, whether it was that 9 on that day, or I know there was Clovis I traded on that day and got pushed out, and then it went up. I know I can't even remember all of them. There's so many where I'm thinking in my head oh, if this works out really well, maybe it can go here, maybe it can do that, and a lot of the times it doesn't. But how often do you need to buy stock at 150 in Apple and get a move to 180? How often do you need to be able to buy stock at $13 in Labu and get a move to 20 bucks? You don't need it to happen very often for those risk-reward ratios to become so outsized that it just makes up for everything else plus plus so much more. And that also goes back to what we're constantly talking about win-win situations. You know, at this point with Neo, you know, unless there's really bad news and it gaps down past my stop loss, which could happen, but I've got a pretty good profit cushion here, so I would say it's a low probability. With the exception of that, I'm not going to lose money in this thing now. So, provided I don't get stupid and, you know, stop following my game plan. So once I'm in this win-win situation, you know, how often do I need this thing to go to $32 for me to have a fantastic month, a fantastic quarter, even a fantastic year off of it? Not that often. So, you know, that's how we want to think about our kind of game planning and reward management and things like that. And I think that basically covers it. I know we were looking at, you know, if the XLE wanted to be relatively strong today, this thing getting above $78, which it did not. Apache, maybe versus like yesterday's high, I think we were talking about $42, or through yesterday's high, something like that. So that opening low was trying to hold even though the XLE was weak, and then eventually that one failed. If you had like an MRO, where maybe you decided to focus on this right away, this one definitely failed, but hopefully this opening momentum move was enough for people to get their risk covered. So not every single thing we had in the morning meeting worked perfectly today, but there was a lot of stuff out there that worked, and there was a lot of stuff out there that worked like incredibly well. Like SunPower, like Jumai if you're able to get stock, and you know, that's really what it comes down to. So anyway, that's all I got, and I am happy to answer any question. Oh, I didn't even talk about, yeah, Facebook was a secondary to Twitter, and Pinterest was another. Oh, I forgot all about Pinterest. Pinterest was another one where we're taking some big ads in this Pinterest off of this pivot area here, and this was so lucky. You know, this inside and up here where I was telling Felipe, I was like, I'm a little nervous. I bought this thing a bunch here at $26.50. I was like, oh, I'm a little nervous to pay up here off this pivot. Pivot low is $26.24. Pivot low is $26.24. It didn't shake out here by just a small amount, and then ended up going. So I can't even be mad that I had an offer up here at $27.99. High of the day is $27.95. I can't even be mad that I didn't get filled on that by 4 cents and, you know, gave it back this amount because I didn't get stopped out of all that adding that I did in here by such a small degree. So this was trading as a secondary to Twitter, which Twitter, by the way, was also on the radar. So just, I mean, guys, so many good trades today. Can't even go through all of them. I had mentioned in the morning meeting going long Twitter versus 45. I don't know if it really ever pulled back enough to give that, but Josh on an intraday basis just called out, I think, right here on this bar at 10.10, going long versus lows, as that ADMA was just about catching up to those lows. So if anybody followed Josh into that trade, that was phenomenal execution there at that point. And you know, this Twitter is, I think, a really interesting story, and it's got me, it had it on my radar even though I wasn't able to get stock, because you know, the thought process of, you know, what's Elon buying in like a 9.2% stake for? You know, he's got to buy at least enough to, like right now it's just a passive stake in the stock. You know, he can't really influence anything. He's got to buy more if he wants to actually start influencing the way Twitter does business. So the fact that this opens it up to a thought process where he's got to buy even more, or maybe a buyout on the company could even happen, it is really interesting. It really puts Twitter back in play. Anyway, that's all I got. So happy to answer questions. I'm going to scroll up here into the VTF. Gabriel swinging some Palantir and some Facebook. Yep, Palantir was another one. Why am I not getting chart data? Oh, they're slow. Yeah, Palantir was another one. We talked about the importance of 14. It was just, you know, you had to recognize, and this also had great opening volume, you had to recognize that today was a day where money rotated into tech and growth, and you had to recognize it early. Like, there was just so, like, almost pick your growth stock. Look at DKNG's volume here off the open and the move. Pick your growth stock. You know, if you're able to recognize that early, it was just phenomenal. Oh, and we even had a couple shorts as I read Steve's question that were on the radar. We had Baxter on the radar for a short versus 77. That actually worked really well. I wasn't in a rush to be in this because I don't want to be fighting the market. I talked about Starbucks as a short versus 90. Problem with Starbucks is that it ended up gapping down too much. When I had done my research on the trade pre-market, it was trading like 89.30, I think, something like that. So I thought that one could be in play, but I'm not paying down over $1 on this thing for that short. And Starbucks, the question is thoughts on its ability to recover. I don't know. I don't really follow Starbucks super closely. I know that original CEO, I can't remember his name right now off the top of my head, the Seattle guy, is really back involved in the stock, and I assume that that's a good thing. But it's also interesting, you know, the whole reason why this was a short on my list today was because they suspended their buyback, which is interesting. And it's also, I don't know, I haven't done enough research. I don't know what the repercussions are of some of these companies like Amazon. Which probably has a lesser effect on Amazon just because Amazon is so big, and the real Amazon story is AWS. But like companies like Amazon and Starbucks where their employees are starting to unionize, I don't know. I haven't done enough research. I don't know if that's significant. I don't know if that's something that spills over to every Starbucks, or if this just becomes a one-off thing because, you know, unions have you know, really lost a lot of their power kind of over the years, I think, broadly. So I don't know. You know, Starbucks gapped below 90. It went down to the next support zone that was at 86 intraday. It closed well. Volume was bigger today. It's in the midst of kind of this broader, choppier consolidation. So I honestly don't have too much of an opinion on it. I usually don't even have Starbucks on my trading radar at all because I don't love it from a trading perspective. I find it usually, I mean, just look at this daily chart. I find that this is how it trades, sloppy. But I thought with that news, maybe there could be a short trade, but then it gapped down too much. So thoughts on the recovery? I guess small time frame, it's bullish, but I honestly don't have too much of an opinion for you on it. Next question here from Feeling Bullish on YouTube. What are your thoughts on a possible pullback on Twitter? It gapped up big. Yeah, so I was just talking about Twitter. I think that news is super significant. Right now, it's very extended. And again, it's super... I don't think it's super significant because it's Elon Musk. But honestly, the fact that it's Elon Musk gets all the Musk followers, the Musk groupies potentially on board with this thing as well. I think it's significant because of the other thought process that he might have to buy more. And then you got him on the bid. And that's obviously going to help your stock move higher. So it's very extended to the upside. ADMA is at $42, then closes at $50. Very extended to the upside on this daily chart because of this gap and subsequent move higher intraday. Could it pull back? Technically, absolutely it could, and give you like a real dipping opportunity. I think that 45 I discussed in the morning meeting today is still in play. But I'll be honest with you, I kind of think it's not going to happen. I kind of think that it is going to have to satisfy this extension somehow, some way. I think there's a real chance that it does it through time, not price. ADMA catches up. Maybe it gives us another setup up here in this $50 area. I think there's something going on with this Twitter. This is a stock that I would like to be long right now, and I'm not. To be totally honest, I didn't get the entry intraday. I do got that pins. I do got Facebook. I got social media exposure. But this is one that I am really interested in. And I've traded this successfully in the past on this way up, and then I ended up bailing out of it at some point when it kind of met my price target. So yeah, we'll see. We'll see. It's really interesting. We're going to be paying close attention to the Twitter story. From Paul, I originally bought NEO on the break of the inside 5 at 940 lows. Okay. Break of the inside 5 at 940 versus lows of the day. I'm assuming is what you mean when you say versus lows, not versus the inside 5 low. Normally, honestly, if I was taking that as my execution for this, I would use the low of the inside 5 because it's a momentum trade. If it's like that inside bar or inside 5 where it's trend continuation, that's usually where I prefer to use the low of the outside bar. In a momentum trade here, I'm usually going to use the low of the inside bar. Though I absolutely understand not wanting to use this as your stop loss because the ADMA didn't catch up yet. But for me personally, if I was trading off of this, if this was my game plan for my execution, and it wasn't for me, I had a little bit of a broader thought process on it, I probably would have gotten chicken out at this low, which would have sucked. But yeah, that's what it is. Let me read the rest of your question. I knew it was still extended, so I took an ad at $9.55 versus the pivot low and sold it for 10 cents to help bring my average price down. Okay. Let me read the rest of your question. Sold it for 10 cents. Just make sure the risk reward on that buy makes sense. And if you're selling the entire thing for that 10 cents profit, you know, that's not... I know it makes the front end system say that your average price is the average of the two purchases, but it's not doing you any favors if you're taking stock off kind of for break even there or whatever. I think that the average price functionality on your trading software can actually be really misleading. I think it messes people up on both sides. Not usually like this. It usually messes people up when they buy high. Like they've got great stock at $20 and they add at $22 and they're like, okay, my price is, you know, $21, and then they end up getting pushed out of the entire thing because of their average price getting in their head like that. I almost like to look at these as separate trades, where I've got this trade with this stock from this price and I've got this trade from this stock with this price. So you want to make sure that on that second trade, if you will, that if you're selling the entire ad here, which is what I think I'm reading, that it was actually worth the risk, that the risk reward actually makes sense on the buy. I don't like the idea of doing it just to make the average price on your chart, on your software, say a lower price. But let me finish reading your question. And did an ad back of the prior ad at the 10:30 pivot. Okay. And sold again on the way up. Yeah, I don't love it, Paul. You know, the direct question here is kind of give thoughts on how you traded it. I don't love it for partially for the reasons I just said. Also, when you're talking about an ad back, I guess it makes sense that if you sold your entire position and you bought it back at a lower price, you're kind of adding it back. That's not the way that I do it, which doesn't mean that it's right or wrong, just because I do things in a certain way, by all means. For me, add backs are when my risk is fully covered and I'm selling a percentage of what I still have, and I'm adding back that percentage. I know I just had my Apple executions up a minute ago. Where'd that chart go? Can't find my chart. It's got my executions on it. Oh, there it is. Like this is an add back. This is an add back right here. I'm taking this stock back. That's exactly what this is. I'm taking this stock back, and then you can see, as per my game plan, I sold this stock at the exact same price again and kind of kept the difference. But this is me just taking back after my risk on Apple is obviously fully covered. This is me just taking back this bit of stock that I sold here, adding it back because it's free stock anyway, if you will, and then you know, kind of reselling it and kind of keeping the difference there. So that's how I think of it. But you know, I like that you're thinking. Howard Schultz, thank you, Zohar, from Sean here. Generally, can net imbalances help you determine gap and go situations versus common gap fill possibilities? I don't think so. Is there a way? Can we assess net imbalances versus the number of stocks traded pre-market to determine whether there is a good entry on the open? I placed 10 cents worth of risk on NEO at the open, covered the risk, but it didn't work out for me. Your earlier discussion on NEO risk rewarding game plan helped regarding a way of getting stopped out. Yeah, I don't like it, Sean. Imbalanced information to me is just information. It's notable information. I don't think I've ever really executed on imbalances. If I have, I definitely haven't done it successfully. I know that, you know, like into the close as an example, MOCs in greater of $1 billion tend to be market moving, but they tend to be market moving. So that's like more like a layer of probability than a trade. And you know, when you're looking at the pre-market there, those imbalances, they really, for the most part, aren't going to affect. So once the stock opens, the imbalance is settled. So they might have actually had to, like, maybe, like, let me give you a counter argument here. NIO's got this news. So I think there was chatter here pre-market in the VTF about how NIO had a 900,000 share buy imbalance pre-market. And I tried to provide a little bit of perspective that the stock pre-market had already traded 14 million. So 900,000 is big, but it's not like a typical day for NIO where it traded, you know, a couple 100,000 shares and now it's coming in with a 900,000 share buy imbalance into the day. It's having a 900,000 share buy imbalance when it's already traded 14 million shares by 9 a.m. So basically what that means is that there's a lot of funds or whatever that need the opening price. But imbalanced data gets arbed away by robots very quickly. We see that happen, you know, into the close also. So that imbalanced data pre-market, when it's there, is being arbed away by the robots because the robots are they're smart enough to be able to understand what that should do to the price. So they're driving the price up right away when that data hits to an area that's actually going to help the market settle that imbalance. It's literally creating balance out of the imbalance. And then the second the market opens, that imbalance is gone. So it no longer can have any effect on the stock. Now your stock is open and it becomes now a matter of your typical supply and demand as the stock is open. And now you're dealing with a large gap up here that's, you know, 7% that has the stock super extended on the small time frames. And that's probably what helped create a lot of that sloppy opening price action. So I do not like the idea of, hey, this is a big pre-market imbalance, so I'm going to try to trade it. You know, there used to be a trade that I used to use back in the day when there was a resistance level that had a really big offer on it that was set to be there on the New York Stock Exchange and had a large imbalance that was larger than the offer, that I would expect that the imbalance would take out the offer and that I would use that as a buy kind of setup. But I don't, that's like an old school kind of trade there. I don't think that stuff works in the same way it used to. And that was like even that back then was like a very rare kind of one-off circumstance when it would happen. Kathy Wood says that the Fed tightening is pricing in the market. Kathy Wood, big surprise for future energy supply will be nuclear. Hey, Stefan and Kathy! They're a team. Is Stefan still here? I love this. I love it. Stefan and Kathy are officially a team when it comes to nuclear energy. I wonder if Kathy's buying up nuclear energy along with Stefan now. From Terry Jones here. Can I give an opinion on GFS? I like the company. That's what I can tell you before I even look at the chart. Looking to go long versus 315 low of 58 bucks. Yeah, this is, I remember saying this even back on the IPO, like I really like this company. I remember being surprised, I think, reading like their S1 or something, that they weren't profitable, which I thought was actually bizarre. But I still like the company. They produce a lot. So I like it. I don't like how much this thing is pulled back here, especially as the market's gotten stronger the last couple of days. I see your trade versus 58. That's almost like a line in the sand, because that's the beginning of where this thing broke out from. So if you are trying to be long GFS, you can't let this thing get past 58. So I see your trade. I would argue that it's one thing that this thing broke 70 and pulled back here a bit, but I think that this thing overshot to the downside already more than I'm comfortable with. So you do have this trade at $58, but why did this thing break your $70 bull flag here? And if it broke your $70 bull flag, why couldn't it just pull back to the lower band of equilibrium and create a pivot? It should have pivoted on this day, or definitely this day. And not only could it not pivot on this day, it still closed on lows, and then it still closed really weak on Friday as well, even when the market pivoted. So I like the company. I agree with you that $58 is really important, but I think there's a few things here that are a little bit against the trade. I don't like this percentage pullback of this upside move. It's not 100% yet, which would be disastrous, but it's more than you should probably be comfortable with. From Trade 117, you mentioned that you were a big tape reader earlier in your career, and it seems like your trading style has evolved over time. That's all correct. Assuming a pure intraday trading strategy without overnight holds, do you separate into different segments and approach them differently? For example, morning versus lunch versus noon, or versus afternoon into the close. Let me just reread the second half of that question. Assuming a pure intraday trading strategy without overnight holds, do you or did you separate days into different segments and approach them differently? I definitely separate days into different segments. This is one of my layers of probability. So one of my layers of probability in trading, whether it's day trading or swing trading, as far as execution goes, is time of day. And I break that up into the following categories. The open, 9:30 to 10 is the best, then 10 to 11 is the second best, then 2 to 4, and then the worst time is going to be, the worst time of day to execute new trades is between 11 and 2. So absolutely, from a probability perspective, time of day really matters to me. And the market, I wouldn't say that I necessarily have rules about this, but I guess I do. The market action is very different based on those different types of days. So what I've never done, and I guess you could do, is take those different time zones that I just kind of discussed, and then like almost create like a cost benefit type chart of trading each time of the day. Like what are the characteristics of each time of the day and how that influences the types of trades that you take in that time. I've never done it. It just always kind of seemed, I don't know, for a long time to me, just kind of inherent in my trading process. So like, you're not really taking momentum trades at noon, as an example. And you definitely don't want to be taking tape reading trades at noon. Maybe one-off circumstances where the whole market's really in play, there's something spectacular happening, or there was specific news in the stock that you're looking at. But outside of that, whereas at the open, you're looking at your momentum opening drive trades, maybe some tape type trades can be in there as well. So you could definitely go beyond just what I talk about with layers of probability based on time of day, and you could say that these certain trade types are best in these times of day, which again, to me, that's always kind of just been inherent in my process. What do you hear me say all the time? Once we get to like 10:15, 10:30, guys, this is when your 15-minute charts become much more important than your 5. So like, whereas 9:30 to 10:15, a lot of times that 5-minute execution setup combined with me liking the daily chart is all I need. If it's 10:45, the 5-minute setup combined with the execution 5-minute setup for execution combined with what the daily chart information is providing me is not enough for me at 10:45. I need to also be having that confirmation from my 15-minute chart. So yeah, those are some examples there, and I hope that helps. From Terry, can I take a look at ACHR? Yeah, whatever this is looks good. Archer Aviation. I like the name. I like the name of the company. Archer Aviation. Cool. Yeah, $5 here I think is a spot to pay attention to loosely on the upside. Really rounded reversal here. Now you want that rounded reversal to really get you back above 6. Excuse me. To kind of complete the thing here. So it's stalled out here. It's building out a consolidation, kind of building out a wedge. You want that wedge to break to the upside, and maybe you got room to 6. You do have a declining 200-day, and I don't know anything about the company, but the chart looks okay. Trade 117. So this is a follow-up question on the time of day thing we were just talking about, or follow-up comment. I'm trying to define them more as I see certain trades that drift in one way for one way or another during lunch, etc., and build rules around them. Yeah, I like the idea. I like the idea. Never something I've done, but I like the idea. Yeah, Twitter had the big buy and balance pre-market. Yeah, that's what we were just chatting about. whenever you're looking at imbalances and whenever you're looking at large bids and offers, it always needs to be relative to the volume in which the stock trades. And maybe it's a high volume day and that matters more. Like someone said that Twitter was the highest volume day that it's ever had today. So that's also significant. Okay, cool. So it's after 5 o'clock here. Great afternoon, great day, all around. Great start to our week. We game planned today really well. We were super on point with the expectation of market upside continuation. There were so many opportunities this morning, from Apple, Microsoft, Facebook, and the FANG world, to some of these more growth speculative stocks that caught huge bids today. Just a massive amount of opportunity. We recognized it pre-market. We executed it during the day for the most part pretty well. We reaped the rewards of it. And then fantastic questions from the afternoon meeting today. These are the types of questions that really help us all grow and evolve as traders. So let's keep that up. You guys have a great night. Buffalo wings were not made originally in Buffalo, Wyoming. Will, I think you're aware of that. But the founder or the person who named Buffalo, Wyoming, where I am today, was from Buffalo, New York, and named the town at the Occidental Bar across the street, which is the same bar where Butch Cassidy and the Sundance Kid were hiding out from the law. So maybe I'll get a drink there a little bit later. Have a great night, everybody. See you tomorrow.